The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to this Squawk Box on Friday morning. It's Payroll Friday. Who can't be excited about the next few hours as well? You're watching Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are your headlines. So, US equities ease back from record highs, with small caps seeing their worst day in 3 weeks. It wasn't that bad, but it was bad. Worst we've seen in 3 weeks anyway, as Wall Street gears up for Friday's big jobs report. Well, the French President Emmanuel Macron, in his address to the French people, digging in, resisting calls to step down, whilst hitting out at the left and the right for toppling the government.
Et enfin, le mandat que vous m'avez...
The mandate that you have democratically given me is a 5-year mandate, and I will exercise it fully until its end.
OPEC and its allies delay plans to increase production yet again, opting to wait and see as concerns over Chinese demand and US output linger. President-elect Donald Trump taps former Senator David Perdue to be the next ambassador to China, while also giving the nod to Elon Musk-ally David Sacks to lead work on crypto and AI.
I think the question is about potency and impotency as well, something that is fascinating. The power of the politicians to get things their way. Well, we've seen impotency from the South Korean president. We've seen impotency from the French presidents as well. We've seen impotency, and I'd be very cautious saying this, from OPEC to get the market to move on the back of its protestations, as was in the headlines there as well. So the power of certain individuals to move markets or to move the political mainstream to their way of thinking is being challenged. The only person who's not seeing any impotency at the moment is Donald Trump, because everything he says, everything he does is having a powerful reaction, whether it be crypto, whether it be US equities, whether it be the bond market. Quite fascinating to see who's got the power and who's a bit limp at the moment.
I thought you were talking about the US versus European market performance when you started this up, because clearly we've seen the US markets being the big driver out there, yes, but Europe has been left behind. Now, as we look to end the week, we've actually seen a decent run for European stock markets.
We have
6 positive sessions in a row. So finally we've gotten going. It hasn't been exactly a runaway trade to the upside. In fact, you can see US stocks move by that entire amount over the course of one day, not over the course of a week. At 1.8% for the week for European stocks. That is not exactly a big move, but it is a move to the upside.
Absolutely.
So we're done in terms of some of that downside. We've got a real prop there to the downside.
How can we be? And we'll go through all of this, but we don't have a growth strategy enacted. We have the ideas of a growth strategy. We don't have a resolution to the problems in Germany at both a corporate and a government level. We have zero resolution to what's going in France. In fact, if anything, from what I've been reading, and I was sending some copy out to the team this morning as I was pontificating upon this, if anything, the deficits in France are going to get worse. So I see people looking for opportunity, and they were absolutely right to try and bottom pick, which is their prerogative as well in Europe, and hence the 3.7% rally in the DAX this week, which you're alluding to with that Eurostoxx move as well. But if the problems are all still there, it's very difficult to form a very solid base, isn't it? I mean, it's a base being based on hope rather than substance.
Yeah, it's positioning too that matters, isn't it? I mean, we were hearing a lot of long-term investors say to us, if you're buying for the long term on some of these markets, given where we've bottomed to at this stage, you're not going to be too badly positioned if you start to add to some of those exposures. However, the self-reinforcing nature of those US markets being all dominant and on major indices, we're pointing this out earlier in the week around the MSCI World Index, just how dominant a handful of US names are, let alone for the overall index. And obviously you're seeing that mark higher, so it's taken US stocks into the green more so than other major markets. But as we wrapped up the trade yesterday, we did see some softness creep into those US markets, the Dow giving back territory, the areas where there have been records to the S&P and the Nasdaq also in retreat. But of course, the next stop is non-farm payrolls today as we waited out for some data and any reinforcement of some of those expectations that we are in store for another rate cut this month from the Federal Reserve. So it is a big day today. Also for bond markets, I look at treasuries and you can see how we approach morning session. The short end, we are slightly elevated, 4.15%, but we're giving back territory at the long end, 4.17%. As a result, the dollar. It is a big one, as I mentioned, for bond markets, for equity markets, but the dollar closely watching some of those trades too. And you can see euro dollar on the back foot this morning. A lot of French politics still as we encounter the Friday session, 105.71. So euro sliding. Sterling also giving back some territory. So real dollar is king story against some of those European market trades. In terms of the Japanese yen, this is where we have seen some ascent, and we're just shy of the 150 handle for that trade on the pair this morning. As for the Swissy, dollar also climbing there versus the safe haven. A lot of watching around the oil market and these OPEC plus delays to oil output hikes until April. So extending out those cuts to into 2026. So a few moving pieces around supply here. And you can see WTI and Brent prices ticking into the green. Spot prices on gold also firm at 2/10 in the green. We're mentioning the South Korean story earlier. Just another narrative where there's a bit more risk around the politics. So that has put precious metal back on the front foot.
Just want to read briefly. I mean, I mentioned to viewers yesterday, fortunate or unfortunate, I had the pleasure of covering OPEC for a good 15 years and having, in that period, probably been to, 30, 40 OPEC meetings and interviewed dozens of ministers and a lot of Saudis and people. That's a disaster. Get that oil price up again, if you would, just very briefly. It's a disaster that you can take 6 million barrels a day off the table, which is what OPEC Plus has done, and still only have circa $70 oil. That's $20 below where they need to balance the books, let alone make money out of their fiscal position. I mean, I'm sorry to say, once again, we have to question the power of OPEC and OPEC Plus to dominate markets. Can you imagine where we would be if they hadn't had some form of discipline on those barrels coming off the table? I mean, I dread to think.
Great news for the ECB, though. I mean, they've been citing energy prices as still one of the concerns out there in terms of being cautious about further rate cuts. So as we see the growth story in Europe be very much challenged, but an ECB worried about elements like the energy price.
While the gas is pricing off oil, because gas is their problem, not oil as such. Oil's been pretty consistent. It hasn't been the major inflationary driver. It's gas and Europe's gas demand. So I would suggest that, yes, gas follows oil a bit slavishly at times, but the multiples we've seen of increase of gas during moments of crises over the last couple of years, that's where our problem is in Europe. It's gas, not oil.
Let's take a look at what we're seeing on the Asian markets. Japanese stocks down 0.8%, holding the 39,000 threshold. Hong Kong stocks are moving much firmer, 1.6% bounce along with the Chinese markets. But South Korea, as we've been watching all the different proceedings around martial law early in the week, impeachment proceedings that may follow. And again, more twists and turns today. The market, they're cautious, down 1/3%.
For all the talk of that weak and limp figure of the payroll last time round, actually, the market's taken it really, really well. And I'd be interested what Alex Morris has to say about that. US non-farm payrolls this time round expected to increase by 214,000 in November. That would mark a significant rise from that figure I just mentioned of 12,000. The unemployment rate is set to tick slightly higher to 4.2%. Average hourly wages seen rising 0.3%. Delighted to welcome back to the show Alex Morris, Chief Investment Officer at FM Investments. Alex, always a pleasure seeing you, sir. Got some interesting comments I know you have about momentum and the trend is your friend, I believe, that you're going to talk about. But let's first of all talk about payroll. I made a statement that actually the market took a very limp figure last time very well because they thought, OK, there's mitigating factors. This time round, less mitigating factors. What do you think, sir?
Well, I think we've proved, if nothing else, there's always some noise in the jobs numbers. For some reason, despite all the technology we have, we can't seem to get this right. And certainly the Fed made that very clear when they made their 50 basis point cut that it really was 25 and 25 because the numbers just weren't right when they first read them. I do think we're going to see a number more in line with consensus because some of the obvious items, the hurricane-related, strike-related items are out. But I do think that the consensus, does have some room for surprise, probably a little bit to the upside, but I think we're going to get this pretty close. That said, I don't think this number, other than a catastrophe, much matters to direction for the Fed. There's a 25 basis point cut baked in. That's been in the can for months. And I think they really want very little to change that outcome at this point.
I mean, I was talking about the potency of the individuals and organisations, the potency of that power of that number, perhaps challenged now as well. Alex, I did something very rare yesterday. I went for a swanky coffee in a swanky private members club in London, and then I moved on for a swanky lunch with another manager of money. So I had a good old chat with two different individuals who are both stunningly concerned about the market and yet believe we have to still be invested. Why are they right?
First of all, it sounds like I need to hang out with you more often. But I think the reality is the market is just absorbing lots of cash coming into it. We still have a $7 trillion money market. And I think the equity market, less so commodities than usual. But if you think about why we would go into commodities or equities, it's because we see growth potential or we're looking to hedge inflation risks. And to your point about powerful figures, Donald Trump ran and won U.S. presidency on what we call high prices, which is inflation concern by any other measure. And I think folks have seen commodities not work as well as that hedge should. Equities have worked somewhat, and they will, but we are seeing, substantial inflationary pressures over the horizon, and the stock market is a great place to be, where historically you have gotten some return, and it seems like you're still going to get that. That said, we think investors are going to need to look for other elements of that playbook into 2025. But for the time being, buying the Mag 7 has had a pretty healthy 40+% return year to date. So why not keep trying that for a little while longer?
Alex, why not be greedy here? You've had a good run. You've got some money there that is sitting, you're sitting on paper gains. Why not change that into some sort of real win at this stage as we close out 2024? Because we know that when markets move to the downside, they move aggressively. Why not take some protection or cash out on some of those profits at this stage?
Yeah, I think some folks will. You will see a little more noise in the numbers. I think some of the pullback was profit taking. You'll see some tax loss harvesting this time of year if you do have any losses to take, which might be hard for many depending upon what you invested in. But I think it is that greed. It doesn't seem like there's any reason not to, and you don't want to miss out on that last 5 or 10% now if you think you can get out fast enough if something were to reverse into 2025. I think that said, you also see a lot more action around earnings releases or major catalysts, particularly for the larger tech stocks. It seems that the markets have pretty well shrugged off a few ongoing international conflicts and, largely speaking, potential other items in the market, whether it's the assassination of a CEO on the streets of Manhattan, attempted coup apparently in South Korea with a variety of other actions, and then a toppling of a government in France. Yeah, markets just seem to roll forward saying this is the best place to be. It's not going to stop.
Alex, that's a great point. We've had a number of shocking headlines this week, but nothing seems to have roiled the market. When it comes to your exposure that you're suggesting, diversified large cap, you say if you want more spice. Why this particular area? Why is it going to capture more?
Well, as we've seen with the small cap market, it's had a great rally, and the fact that everyone started putting out small caps time is finally here was sort of the first indicator that it was going to falter, and sure enough, we saw elements of that today. We think outside of the Mag 7, you're going to see a lot of those names continue to go up. We've been rewarded on that trade in the last quarter. That hadn't been so the few quarters before then, but that's where the money seems to flow. If we look at the structure of the market, particularly a lot of retirement assets that come in, they go into well-diversified funds. And that core part of the large cap space has done well historically in generally all markets, particularly times of slight stress. And that's where we seem to find ourselves. And it seems like the asset flow just keeps pushing those prices up, more of a supply of cash in looking for those shares than it is anything else.
Alex, don't be afraid to hold NVIDIA. That's one of the ideas you have as well. Why not? Because this has been another monster year. The year prior was a huge year for NVIDIA, but we know the challenges are going to come at some point. Why is that not a 2025 story? And do you need to be cautious going into next year because of that potential threat?
When you look at any single name that's had that sort of price movement, you always need to be cautious and pay a little extra attention to it. But you have to also ask yourself, if you were advising a client 2 years ago not to hold NVIDIA, would you still be employed as their advisor? And the answer is probably not. So I think folks really need to be able to ride some of those trends. Those names are highly liquid. There is apparent liquidity where you could get out relatively quickly. And if you look at it on a 5-year holding basis, you would have made hundreds of percent return, which you should be willing to give some percentage of that back for that opportunity to have made that pretty striking overall wealth creation event for yourself or for your clients. And I think as a result, it's still okay to hold. The numbers on the business are good fundamentally. There's a lot of demand for their product. There will only be more and continued demand for that product set. And they've been able to deliver against most of their metrics with pretty high consistency. And put aside all of the other stories about it, if I just told you that story about a company, changed its name, put it in a different sector, you'd still love to hold it. We shouldn't allow the headlines or the fear of where it is today or the name NVIDIA get in the way of what's a pretty sound investment.
All right, Alex, we're going to leave it there. Lovely to see you today, my friend. Thank you very much indeed for it. And anytime you're in London, you can hang out with me. But to be fair, it was an anomaly yesterday, and I don't normally go out. It's Karen you need to hang out with. But nice to see you, sir. Alex Morris, Chief Investment Officer at FM Investments. It was very festive in London yesterday.
Well, it is. I mean, the capital's at its best in December. I always think.
My God, it was lovely. I actually hung out in a place I never really hang out, and that was Mayfair.
Yes.
And it was gorgeous.
Well, Mayfair certainly embraces
I saw your favourite
Christmas.
shop.
Which one of my two
Brunello,
favourites?
that one.
That's not one of my
Oh,
favourites.
yeah.
Yes. That's one of your favourites to mention. It's not one of my favourites.
My favourite's like Romford Market, I tell you, compare. I wouldn't go to that. Anyway, look, coming up on the show, my goodness me, Macron digging in. Well, as indeed he should, really. Even as polls show the public now want an early presidential vote. Some of them do, following the collapse of the French government. Plus, is there more big M&A ahead for UK markets? Aviva reportedly sweetening its bid for insurance rival Direct Line. We will discuss. And as Europe talks about military spending and how they might have common procurement and common pools of money in Brussels, we're going to hear from Pascal Bantaigne, who is the CFO of French defence group Safran. That's coming up at 8:15 GMT on Scorebox.
French President Emmanuel Macron has vowed not to step aside until his term is complete. Macron said he will appoint a new prime minister in coming days, adding a new budget was a, quote, priority. The French president also accused MPs at the National Assembly of creating chaos.
Pourquoi ces députés ont-ils agi ainsi?
Why did these MPs vote like that? Not because they think about you, your lives, your difficulties, your end of the month, your projects. Let's be honest. They think about only one thing, the presidential election. To prepare for it, to trigger it, to precipitate it. And to do this with a cynicism and with a certain sense of chaos.
Et enfin, le mandat que vous m'avez
The mandate that you have democratically given me is a 5-year mandate, and I will exercise it fully until its end.
Well, let's take a look at the state of yields, and you can see the 2-year we're 2.19%. It's the 10-year we've been watching closely, but in fact we've drifted off some of the highs we've seen even in recent weeks. We're now 2.88%, so off the 2.9 plus we're trading at. So in fact seems to have stabilised at this stage. A majority of French people want President Macron to resign and for the country to hold presidential election. That's according to a new poll by Elab and BFM Television, which also pointed out that 41% of those surveyed think President Macron is responsible for the current political turmoil. Charlotte is here for more. Charlotte, the president is keen to point out that this is a state of disarray. He's blaming the far right and the left-leaning coalition. But how much of this is actually going to touch the sides for Macron here? And can he remain immune to these calls for a fresh election?
Yeah, well, it's interesting to see all these polls about asking him to step down, etc., and how he really made a point. It was a very clear message that he will stay on until the end of his mandate. And, you know, constitutionally, he doesn't have to do anything. It's not because a prime minister is toppled, there's a constitutional mechanism that allows MPs to topple a prime minister, that then a president has to leave as well. They're two different positions, and it's on purpose designed that way. The president gives that sort of continuity of the institutions, and the prime minister, they can change. Now, the question is, further down the line, if we go from one government to another government being toppled one after the other, and we are in a complete situation of blockage, of chaos, that the the country can be governed, then some people say that maybe there will be a solution further down the line. But certainly asking, like now the far left group, Les Insoumis, saying he should leave right now. You think, but that's not going to solve anything. Parliament remains the same, even if there's a presidential election tomorrow, which can happen. But Parliament and the fragmentation of it remains the same, so that wouldn't necessarily be a solution.
Because you can trigger one sort of an event with what's happened here, and that's some sort of chaos around Parliament and whether there should be sort of fresh legislative elections. But the other point is around the backstop of the Constitution here. So if Macron were to step aside, what would that mean for future presidents if there was a chaotic situation?
No, exactly.
Doesn't it sort of unravel the whole idea of having that president that is somewhat separate from the government arm?
No, exactly, and that's what it's supposed to be. Here again, that's why it was designed that way, a president and a prime minister, and often the prime minister is seen as the fuse of the president. President has that constant, and if people are unhappy, the mood in the country changes, you change the prime minister and the government, and that's what is happening at the moment. Here again, we might be in a situation of blockage later on. There's still a lot of time in his mandate, and that was very much the message he was hammering yesterday, saying we have 30 months ahead, and we're still working, and that he will name the prime minister in the coming days, that he's asking that person to form a government of general interest for the country with different political groups in it as well. So, he said he was taking responsibility for the snap election, but not for the irresponsibility of the extremes that toppled the government. And of course, he pay attention of the impact of not having a budget for the country. So, he was quite feisty, the message yesterday. We'll have to wait and see how that goes down in the public opinion. Certainly over the weekend, he's at the opening of Notre Dame. A lot of dignitaries traveling to Paris for this, including Donald Trump being there. You have to wonder, will he have a prime minister at that point?
Yes.
But he was using that, and that was the plan for a really long time before the government was ousted, that the Notre Dame reopening would be a symbolic moment for his political career as well. They would be the reboot.
If the Olympics didn't do it,
the challenge of something being bad and the rebuilding. Well, that's not going to happen this time.
Spiritual credits when he goes to Notre Dame.
Let me give you guys an anecdote first of all. I spoke to a very senior Italian politician before Meloni became prime minister, and he wanted to change the Italian constitution. He didn't get any support for it.
Oh, that's ringing your bell, isn't it?
Well,
I know exactly what you're talking about.
And he wanted to. Do you?
I believe so.
Well, go on. Who?
Renzi.
No.
No?
No. He was in government, this man.
Okay.
And cut a long story short, he wanted to create a more presidential figure. And he challenged me. He said, well, do you know who the French prime minister is at the time? Because they've had such a revolving door. And he wanted to put Draghi in as president to create stability, and so that the role of the prime minister was less important. Obviously, moving on, Italy has a degree of stability at the moment, and Meloni's proved better than many people thought. But bring this back to France as well. It's the inconvenient fact for those French people who want to see an early presidential election or want Macron out. The fact of the matter is, the key players don't want it. Marine Le Pen, she's very, very happy to watch him squirming, to watch him over this period of very problematic period. For her to come in now is not a great situation for her to come in as president when you have these big blocks which are ungovernable. So she's very, very happy. So he's very, very happy to keep the role because he wants to kind of try and fulfill his mandate. She, who is most likely to be the next president at the moment, cateris paribus, all things being equal, rather than Luc Mélenchon or what have you, the fact of the matter is she doesn't want the job either. She's very, very happy to carry on watching him squirm.
And yet, what's very interesting is that the position of Marine Le Pen has changed quite dramatically before and after a judicial decision that said that maybe, because she's in a process at the moment because of her party being accused of using some European money to finance her own party in France, which is not allowed, then a prosecutor asked for her to not be eligible. Potentially, and we'll have the decision in a couple of months. And if that happens, I mean, she cannot run in the next presidential election. And a lot of people said that her position towards the government was very different because for a while, if she wanted to run, she was ready to take time, build her party, build the credibility of her party, work with Barnier here and there, but kind of set the agenda because here again, they own the destiny of the government at that point in their hands. Now that maybe she might not be able to run, some people say that, you know what, she's setting everything on fire. I said, fine, if things are going to be like that, then let's go for it, let's fight.
She's not sitting
and so
on
the
fire.
mood has changed dramatically in that period.
I mean, I don't necessarily hold with the politics of the extreme left or the extreme right, but she's just fulfilling her role, and that is to hold the government's feet to their fire. That is the role of an opposition politician.
But you can't be in opposition forever, as you say. At some point, if you have to want to be seen as a politician that can be elected, then things to change, and that is the thing.
Come back and have more chats. In fact, of course you are. There's so much to say. Right, let's move on. More political consternation. This time on the other side of the world. South Korean President Yoon Suk Yeol is expected to face an impeachment vote tomorrow, with the leader of his own ruling party, oscillating, had been joining calls for his immediate removal. But is that still the case? That's what I want to know. Well, let's take a look at where the Kospi is trading. 24.27 is where it currently is. Let's have a look at the won, the Korean won. That's the South Korean won. It was much amusement to the team to know that the North Korean won is also a won. Yes, let's get to Sherry Kang, who knows the difference between the two, obviously. And she joins us now from Seoul. And so, by the way, thank you very much indeed. I know security's been mucking you around all morning, so well done for your team getting you in place, by the way. Thank you very much indeed for that. OK, tell us about the latest, because one of my reads was about the leader of the own ruling party joining the calls for immediate removal. But is that still the case, Sherry?
That is still the case in this very fluid situation, very much of a developing story. You thought that a martial law in South Korea in 2024 was a wild story. Well, here's another one, because now the ruling party, president's party, the Conservative Party leader just this morning said that the president actually used the martial law because he wanted to arrest some key politicians. And now the list of politicians that Yoon allegedly wanted to arrest is making some rounds here. And according to those reports, it actually includes the ruling party chief himself, who is speaking this morning, as well as the opposition party leaders as well. So basically leaders of both sides of the aisle. So that is a wild bit as well. It definitely increases the chance of the impeachment vote to go through tomorrow. We've got just over 24 hours or so till that vote. And because we're getting to that point, a crucial vote at the National Assembly, and because it is perhaps a Friday afternoon, the situation outside the National Assembly is definitely picking up and changing pretty quickly. We've got the security situation, as you mentioned, being ramped up because the protest is definitely picking up as well. And we were actually told to clear outside of the National Assembly compound because of that very fluid situation as well. And the next question we should be asking is, does this somehow divide the ruling party going forward in future election as well? And then here's another thing. Steve, you were talking about the moves in the stock markets as well as the currency move. It actually really was a sensitive market reaction that we saw earlier this morning. I think what the market really reacted to is this possibility of a second martial law that is raised by the opposition side. So do watch out for that. In the meantime, I think it's important to also talk about what's going on in terms of the president, his whereabouts, because he's been really silent until from the martial law night. Now, reports suggest that he's sitting down with the ruling party chief as we speak this afternoon. Now, his office is denying all this right now, denying that the President Yoon declared the martial law because he wanted to arrest some key politicians. Still very much of a developing story as we are counting down to the impeachment vote that is happening this weekend.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.